everybody? What's up, everybody? Thank you for being here today. This is another long-form interview for my YouTube channel at Ched's Trading. I have a wonderful conversation today with a gentleman named Checkmatey. It's James. He's a wonderful and really intelligent fundamental analyst. He does a lot of great work. You can see his links here on his Twitter page, and here is his newsletter as well. I'll have all these links included for you. I am, of course, Big Cheds on Twitter. I am a founding analyst at Bitcoin Live as well. And this is going to go into my long-form interview series on my YouTube channel. Folks, while you're here at my YouTube, I want to remind you I have a brand new series, the Trading Encyclopedia, 3-minute videos every day to teach you key technical analysis and trading concepts. Make sure you check that out. But enough about all that. Let's get right into the interview with Checkmatey. So let's get it going on here, folks. All right, folks, here we are. We're here with our next guest. It's James Checkmatey on Twitter and other platforms. A really smart individual in this space, going to bring a fresh perspective. And I'm really looking forward to our conversation here with our next guest. James, how you doing, man?
G'day, Cheds. Thanks for having me on, mate.
Yeah, thank you so much. So for those of you who may not know you, a lot of people follow me for the price. I'm kind of a price nerd. I'm not smart enough to figure out the on-chain or the outside the chart stuff. Maybe they don't know you. So why don't you kind of give us a sense of who you are and what we should expect from you?
Yeah, sure. So, I mean, my background is a civil engineer. I used to design everything underground, which is tunnels, basements, mines, all that kind of stuff. And I found Bitcoin. I mean, I bought the 2017 top. I didn't understand what I'd bought, but the 2018 period was probably my most formative. I mean, it was my formative time. Bitcoin was literally the first thing I ever bought in any market ever. As most people who went through 2018 knew, it was down only pretty much, but there was something about price that just fascinated me and markets. And I was very fortunate to come across a trading mentor, and he really taught me about options and just human psychology. So that's really like my foundation is there's something about markets that really captivated me. And I knew there was something in like the crypto thing, but I didn't really click to Bitcoin until my $10,000 portfolio was 10 cents. And I thought, okay, now I've got to go back and actually read the white paper and start again. And I was like, oh, okay, now Bitcoin makes sense. And I've got this kind of background of A, surviving a bear market, and B, just understanding price and psychology. Now, around late 2018, early 2019, on-chain data started to be developed. The very first metrics started coming out. And it just tickled my engineering brain where I'm like, I can take information about the fundamentals of this asset, chart them up, plot them out, compare them against each other, and actually understand what humans are doing. So one of my biggest lessons from just understanding markets, not even on-chain data, markets, is it's just people, right? So the price chart that you're looking at is just fear and greed plotted against time. And on-chain data is exactly the same. And the beautiful thing is we can see everyone's cost bases. So what happens is people buy tops and they sell bottoms. That was my dumb self back in 2018, thinking I'll buy back lower. And then the converse, you see smart money who bought at a low price, patiently waiting and waiting and waiting. And then the market starts rallying and they start selling. And it's funny because you look at the narrative on Twitter and everyone's saying this thing has no ceiling. It's going up forever. And meanwhile, you just see long-term holders unloading consistently. You're like, well, maybe, but probably not.
Yeah. So what about, I mean, there's so many things I want to ask you about. So what about these like ancient whales, right? You see these alerts, wallet untouched since, 1975 has been reactivated, Isn't it okay for people to maybe take profit, or maybe they're just moving stuff around? We don't know, right? We don't exactly know.
Totally. And yeah, there's a few angles to this. The first thing I'll just leave people with, you'll see me say this all the time, don't whale watch, kids, because the problem is it's so easy for people to anchor to these whale wallets and say, oh, look, this is what's happening. Now, the truth is we have actually seen some of those ancient coins, like there was an 80,000 Bitcoin wallet that did in fact distribute via Galaxy.
That's right. Yeah.
But also, what if they just moved into Galaxy? Like they were doing it for inheritance planning. What if they just moved their coins from pocket A to pocket B to move it to their inheritance? And there's all sorts of stuff that can happen there. So the reason why I say don't whale watch, when we look at on-chain data specifically, generally speaking, if you're looking at small wallets, right, sub 1 Bitcoin, some 10 Bitcoin, that whole pool, we call them shrimp. And frankly, they move like shrimp. They all just do the same thing.
I take offense to being called a shrimp here. No.
Yeah. Well, if you've got many wallets, right? Lots of people when they're DCAing, you may have 20 Bitcoin, but you're still going to be a shrimp. And your behavior pattern is the same. We all move as this big amorphous mob. And frankly, if there's one outlier, they just aren't big enough to matter. So we don't have to care about them. Once you move to the other end of the bell curve, the challenge is you're talking about a couple of thousand entities. They've got tens of thousands, hundreds of thousands of Bitcoin. And are they an exchange or not? And the fact is, there are no data providers that I'm aware of that do a sufficient job cleaning up their data and actually segmenting and saying that's an exchange, that's a whale. So I actually just say, don't, because you have no confidence in the data, don't look at it. And it's great engagement farming. People love to talk about it. Frankly, you really just don't have to. I never look at it. You'll never see me covering that stuff in my analysis, with very few exceptions, like this 80,000 Bitcoin transaction, because that was interesting. It was 14 years old. It hasn't moved for a long time, and it was in fact sold. So that's worth covering.
So how do you approach your analysis, right? You said you don't look at that. Like, what exactly you do? And for someone like me who understand on-chain, like, what is it you do exactly?
Yes. So there's various ways we slice and dice. So if you think about the entire Bitcoin supply, every single UTXO has a packet of information associated with it. When did it last move? So when was it acquired? What was the price or the cost basis when it was acquired? How long has it been held for? Now, when it is spent or unspent, so when someone's holding it, we can see their unrealized profit or loss. What drives people to make decisions? It's when they look at their portfolio and they say, that's a big green number, or I can't take it anymore. That number's way too red. So that's the unrealized profit or loss. And that's really important. You may hear people talk about like MVRV as a ratio. That's literally just the average unrealized profit or loss in the system. So when lots and lots and lots of people are going, this bull market is making me rich as anything, there's a bunch of people out there going, it's time to sell. That's my signal. So it's that instinct of what people actually feel. And then the other side of the equation is when we start seeing them actually spending, you can see the realized profit or the realized loss. And we could look at this by different groups, right? So if you think about people who've held their coins for a long time and people who bought 2 weeks ago, two very different animals. Trader types or speculators on one side, long-term holders and hodlers on the other. So imagine an environment where the narrative on Twitter is that there is no top, and yet the hodlers and the long-term guys are selling coins that are up 300, 400, 600%. And all the short-term traders are bidding this thing up like crazy. That's starting to feel a bit euphoric. And then what happens in a correction is you see all those euphoric speculators who buy the top, the market starts to correct, and suddenly they go into an unrealized loss, and the hodlers stop taking profit. So now I've got a signal for that's starting to look overheated. I've got smart money selling, dumb money buying. You wait a couple of months and you've got dumb money who bought the top selling at a loss and thinking, oh, don't worry, I'll buy this back lower. And meanwhile, the guys who know what they're doing are turning off the sell side taps. So it's like, what are they actually doing? I mean, they're probably stepping in and buying the dip. So suddenly I've got these two signals to just understand what is the ebbing and flowing of buy and sell side pressure.
So what is this? What is the realized cap? Right? I checked out a couple of your tweets, and I didn't understand any of them because I'm not that smart. But
sure,
what's realized cap? What does that mean?
This is the most important metric. So whenever someone says like, how do I get my head around this stuff? Start with the realized cap. So the challenge with the market cap, let's just start there. You take every coin in the supply and multiply it by the last traded price. So what's the problem with that? Well, first of all, Satoshi's coins are probably lost. There's a bunch of coins that haven't moved in 10 years.
The guy with the landfill, right? Guy with the hard drive landfill, yeah.
Exactly. So like, does it really make sense to value the entire circulating supply at the last traded price? I mean, kind of if you compare it across asset classes, but not really. There's a better way to do this, which is the realized cap. And let's value every single coin. So every UTXO in the Bitcoin supply, just value it at the price when it last moved. So Satoshi's is 0, early miners are $500 and $200 and $20. And the guy who bought yesterday is 113K. So by valuing every coin when it last moved, it's like this liquidity adjusted system. But here's where the magic comes in. Some guy buys his coin in 2019 at 10K. He sells it at 100K 5 years later. Somebody else had to come in with 90,000 extra dollars times the coin value to actually buy that coin. So that's a capital inflow. A coin that was previously valued at 10K is now valued at 100K. And likewise, the guy that buys the top and sells at 75, he's destroyed 25K worth of capital. That's a capital outflow. So in aggregate, the way the realized cap changes, the gradient, the steepness, how much it's increasing, tells us about capital inflows and outflows of the entire system.
Interesting. Okay. So what are your, is that kind of like, as opposed to like mark to market, as opposed to just like what it's worth now,
Correct.
Okay, so that's a little
And
more
one way
nuanced.
you can
Yeah.
think about it or reason about it, like if you bought coins in 2019 and they're still sitting in a cold card,
Yeah.
those coins, that is how much you saved. You bought one Bitcoin at 10K, you actually saved 10 grand. And
Mhm.
it's saved there at that point of 10 grand. And until you move it again, it's going to stay there at 10 grand. So in a way, it just crossed $1 trillion, the realized cap. So that's telling us that people who have invested dollars at the time when they invested it have actually trusted $1 trillion worth of their savings into Bitcoin as a savings asset, which I think is a really cool stat.
So do you think it should be a savings thing? Do you think it should be, because it's funny when it started, um, you know, it was cyberpunk and now Wall Street's buying our bags, quote unquote. But it makes sense. Doesn't it make sense for it to be part of a
Totally.
portfolio?
Yeah, it does. And, this is those things that a lot of people will say Wall Street's co-opted us. Like, well, they're not
Yeah.
changing the way that I behave. My behavior hasn't changed. I keep doing what I'm doing. So,
Yeah.
like, co-opted, but like, did you expect it to become a multi-trillion dollar asset and take over the world without Wall Street ever buying a single
Right.
coin? Like,
Right.
this is
Right.
just part of the process. And also, this is where the cypherpunk thing comes up against the reality of the world, which is most people don't want to take self-custody. That's just a
Yeah.
reality. It's not the world we want to see, but it's the world that we live in. So the
Mhm.
truth is that these ETFs, to get people on board for the first time, there's a lot of people, like, if you talk to your parents, for example, and they go, oh, I want to get some exposure. I'm not going to set them up with a cold card.
Yeah.
I'm going to just say, just go and buy the ETF because it's trivial, it's easy, it's in your brokerage account. You don't have to change anything. Now, if you want to, you can go and do the learning process. But, at the end
Mhm.
of the day, a lot of people just won't do that.
It seems like it's a solution to me because for the longest time, you'd hear stories of people, all these like horror stories of self custody, and of course, there's some horror
Totally.
stories of centralized custody. I'm not saying there's not, but barriers to entry, right? And every new run, you need new retail. So these other mechanisms to get more money into the ecosystem, I'm in favor of. It's just interesting to me. It's just interesting to me to see it so cool now, to see it so mainstream, um, and being compared to gold, right? Being compared,
Yes.
that's the big analog, and Bitcoin price with the market cap of gold and what that would be. And I saw you tweeting at Peter Schiff earlier today. He picked his end of November, right, versus 1st of November, and so the gold bugs are sweating a little bit. It seems like.
Yeah, I think so. And it makes sense, right? Because when you actually understand what Bitcoin is, it is gold you can teleport across the world. And
Yeah.
that alone is, and also you've got the absolute scarcity element. Like if
Hmm.
you run the experiment of human history long enough, at some point we're going to come up against weird things like quantum and all that. There'll be a risk to Bitcoin, but at
Yeah.
some point we're also going to go and mine an asteroid and bring back just limitless gold.
Right.
And but both of these two things are going to happen at some point in time. And really, Bitcoin is the only one that we can have any confidence in. I think we can deal with all those quantum threats, but I think at the end of the day, Bitcoin is the only one that is absolutely scarce. Whereas gold, quite frankly, there's stacks of it. We just haven't found it yet.
So can you talk us through what that quantum threat means? Like, what is it, for someone who has no idea and this is all going over their head? What does that mean? Why is there a quantum threat?
Yeah, so the first things first. There are very few people, including myself, qualified enough to even have an opinion on this because it's deep and dark. And I've
Okay.
asked a lot of people who are much better off than I am in terms of their understanding.
Yeah.
And the only common thread from all those conversations is that the quantum world is the only place where there is more grifting and lying than there is in the crypto space. It's the only one that competes in terms of that scale.
Okay.
So my best understanding, the quantum threat is basically that there's two attack vectors. One is old coins that use they don't hash their private keys and or their public keys. So some of those
That
old
means
coins,
they don't obscure it. Is that what that means when they don't
yeah.
hash it or?
So basically, a hash function is a one-way function where you can say, "I'm going to put this piece of information in, run it through a hash function, and I get out a unique string." But I cannot take
Oh,
that unique string and back out the
and
original piece of
reverse engineer
information.
it. Okay.
Yes. So the early addresses are just a pay to pub key. It's just the public key. But later editions all segue. And I would say if you've been around, if unless you've been around since like 2012, you don't have to
Mhm.
worry about this. Your wallet will already be sorted for this.
Okay.
But all the other ones use a hashed function. So anyway, those early coins in theory can be stolen. There's also some risks in the mempool, but that's a whole different animal.
Mhm.
My view is at some point in time, Bitcoin is, if this is our life savings, and a lot of people it is,
Mhm.
they're going to solve the problem, right? We're going to work out a solution to this thing. And
Make
I
it
also
quantum
believe it's a
proof or
lot,
whatever.
yeah, it's a lot further away than the doomers want to say.
Mhm.
So in my opinion, it's not an issue that is immediate. It's probably not even medium term, but it is something that's going to take time to resolve and solve for. So in many ways, the conversation's happening now, and in probably 10 years time, we'll be talking about implementation. And then in 20, 25 years time, we'll start saying, oh, look, that was a good idea.
Wow, 2020, 25 years, right? What are we, Bitcoin,
Well, this is the
20
thing.
million,
Who knows? No one has any idea. Yeah, exactly. And that's the thing. The more the Bitcoin goes up, the more incentive there is to A, build the system to attack it, but also B, to protect it.
So you're pretty much like a Bitcoin guy. I mean, do you mess around with altcoins at all?
No,
Or
mate.
what's your
I've done my altcoin journey, and I've
Yeah.
written about it. I've been through the process. I've bought, I've held, I've studied, and I did eventually just come back and you know what, Bitcoin is where the signal is. So
Yeah.
everything I do at the moment is Bitcoin only. It's where I think the signal is, and this is the thing. There's 1,001 guys out there who can do altcoin analysis. There's very
Yeah.
few people who just do really clean, concise, and consistent Bitcoin analysis. So that was the gap in the market that I wanted to try and step in and fill. And the other thing I've found is that with Bitcoin, there is like all this on-chain data is very real and very organic,
Okay.
because the only thing Bitcoin does is move around. It just moves itself around. There's no DeFi protocols. There's no like swaps. There's no money markets. And the data is just really noisy and unclean with everything else. You can look at a great example of this. There's a metric called the HODL waves. So imagine like a dominance chart, and it shows how old the supply is. So you can see like how much of it is 10 years old, 5 years old, 2 years old.
That's
And if you look at a
interesting.
lot of altcoins, there's a huge pool of these coins that just looks, it's like very unnatural. You realize it's the founding team's treasury.
Oh, I
And it's
see.
like 85% that's been held since Genesis. And when they spend it, the whole HODL wave breaks. You're like, it just looks really unorganic or
Yeah.
inorganic. Whereas Bitcoin is just packed full of human, just raw sentiment. So it's a really, really clean, crisp signal, which for me makes it just so much more interesting.
Is there a risk of us kind of over evangelizing Bitcoin? I mean, I know I'm all about it. A lot of what I do professionally is built around it, but there's a risk in us kind of talking about it in these ways where it's the simplest, it's the cleanest, is there a risk
Yeah, I
there?
mean, there is, but at the same time, there's one of my favorite, like, I guess you call it like it's not a phrase, it's a concept, it's an idea. It's called second system syndrome. And this is where engineers look at a very, very simple and elegant system, like a protocol,
Okay.
and they go, it can't work. It couldn't be this way. And they go and try and design features to fix it. And I think Ethereum is the perfect example of second system syndrome. Every
Mm.
time they build a new feature to try and beat the Bitcoin simplicity,
Yeah.
they realize, oh shit, we broke this. Oh, let's build this. Let's build this. Oh,
Yeah.
we need more. And eventually they just go, oh man, we didn't actually solve anything. We've got all these moving pieces, hundreds and hundreds of thousands of lines of code to replace the 100 lines in the difficulty adjustment. So they built the whole proof of stake system. And like you could have just used proof of work and the difficulty adjustment. It works just fine. So I think that's where I think Bitcoin is so interesting, is it's so simple that people can't believe that it works, and yet it just keeps doing its thing.
So sounds like you think that Ethereum could have stuck around proof of work.
I do, and even though look, there's 1,001 technical arguments, but I just bring people back and say, well, what was on the Ethereum.org website as the two reasons why they went to proof of stake? The first one was the environmentally beneficial, and frankly, we now know there was a lot of evidence even back then that proof of work is actually more environmentally beneficial because it can mine methane off landfills, right? It
Right.
can actually be
Right. Right.
carbon negative. So we've
Right.
kind of solved that problem.
That's
And the
interesting.
second one was sharding. And they dropped sharding within like 2 months after the merge. And they already had all these layer twos. So you're like, so if they were the two stated reasons, what did you go to proof of stake for? And the other thing
Yeah.
that I had for as my view, it's the only, if they stayed proof of work, that was their only differentiator from the Solanas and the whatever
Yeah.
else is out there. That was actually the only thing that you had that was different. Now you're competing in a landscape where you have no real advantages. You've got a whole lot of technical debt. You don't have all the lessons learned that you had to be the one that learned. Like you actually had one advantage and you kind of gave it away. And I think that was a really big blunder.
So you think maybe like Sol or some of these other ones can take over Ethereum one day, that number 2 spot, or you think they're just going to stick around because they're kind of first to market ish?
Yeah, well, my view is actually it's a little bit more nuanced than that. So
I hope so. I
when
hope
I
so
look
because
at
I don't know what I'm talking about.
no, it's good. When I look at the altcoin, let's say the L1 world,
Okay.
all of them are utterly dependent on stable coins. Without stable coins, if you deleted Tether
Yeah.
and USDC, the DeFi systems would collapse.
Right.
At the end of the day, people use these things because the stable coins is the borrow, it's the lending, it's really the main asset. And Paulo from Tether put out a tweet today, which I was engaging with, where
Mhm.
40% of all gas usage across all the major chains is Tether alone. So that just shows you
Mm.
what's the dollar? 50% of both sides of the trade, right? It's the unit of account. So if your weakest link is Tether, where they can literally turn off an account tomorrow and move it from
Yeah.
Ethereum to Tron, if a blockchain blows up, they can just move everyone across to another chain. So
Yeah.
if your weakest link, and this is actually my, I guess, a bit of a unpopular opinion about Ethereum, a
Mhm.
lot of Bitcoiners will say it's centralized and blah blah blah. I'll say no. It is actually decentralized. It's
Mhm.
too decentralized. They have over designed the ship and all the security system that can just be turned off by Tether and USDC. So they've almost over designed the system when your weakest link is a centralized database of your stablecoins. Whereas a Solana and all these things, and again, I don't have a particular view on any of these tokens,
Mhm.
all those, they are kind of the same level of centralization. There are a handful of servers around the world that kind of matches they are the correct design for the thing you're actually securing, which is a centralized database. And then if you run this experiment long enough, at some point in time, no one wants to pay gas with ETH. No one wants to pay gas with Sol. They're just
Yeah.
going to pay gas with Tether. And institutions, they don't want to buy an extra asset. They just want to buy Tether. So
Mhm.
I'm actually of the view that L1 blockchains go to their um, marginal cost of production, which is the price it costs you to send USDC around and USDT around. And it's going to be not much. It's probably going to be priced in dollars too.
We heard Tether FUD like forever, right?
Yeah.
For the years, certainly I feel like from 2017 to 2024, like big drumbeat. And I think it's gone away. I don't know if they've just spread the
Yes.
money or if they're just in the system now, but it seems like no more FUD, right?
Yeah, and I think this is the thing. Like for Tether, there's no question in my mind that there were periods in time in their history where they were probably unbacked and they probably did some
Yeah,
naughty things.
sure.
But then the US government has gone, hey, look, you're going to buy our bonds. And look,
Oh,
the
right,
way
right.
I view it is actually fairly simple. You don't get to $150 billion and like the sixth biggest holder of treasuries in the world, sovereign nation state level,
Wow.
without a tap on the shoulder and saying, here's how this works now. You know what I mean?
Mm.
Like they've just got
Yeah.
so big and they're now actually, like you can see it. Paolo from Tether is at all of
Mhm.
these stablecoin bill signing ceremonies. So
Yeah.
in my view, they've hit that escape velocity where the US, they are the CBDC. They are the dollar. And what I think is so fascinating about the stablecoin, the whole trend, is its dollar dominance. It is just an example of the dollar milkshake, however you want to frame it up.
Yeah.
It is the dollar just exerting itself. And the cool thing is, it's not like foreign nations want their people using it. They want their people using their local fiat, but
Yeah.
their population is saying, I don't want the peso. I don't want the bolivar.
Right,
I
right,
don't want the
right, right.
dong. Give me Tether.
Give me the Tether because it reminds them of the dollar, right? The dollar
Yep.
hegemony. And are we I mean,
Yep.
I'm a terrible fundamental analyst, but, I mean, the dollar strength is trending down a little bit, right? Based on trade policies and some of these other things, right? So,
It,
it'll be
it, it is, but over the long arc of time, it's still fairly high. So,
yeah.
and it was funny actually. I was in we went to go and visit. We were over for the Nashville conference last year, so July into August. And on that path, we went and visited our mate over in Tampa, Florida,
Okay.
and he works with Kathy Wood. So we went and visited their office and did a bit of a tour and sat down in one of their macro meetings.
Oh,
And they
wow.
were talking about dollar strength, and they zoomed all the way out, and you can see the DXY, and it's just this massive, like since 2008, massive uptrend.
Yeah.
And they were talking about dollar strength, and yes, it was pulling back and all this. I said, look, can I just put in my two sats? As an Australian traveling in the US, I can tell you here and now that the dollar is way too strong. Everything in this country is
Mm.
30% more expensive than literally anything. And I don't
Mm.
come from like a poor country. Australia is already expensive. People say that about our country.
Right.
Your dollar is out of control expensive. So, and she's like, that's actually a very interesting point coming from an Australian. So, I
Mm.
think that's, yes, it's coming off the highs, but it's still globally very, very strong in the long arc of time.
So did your work, have you traveling a lot? It sounds like you traveled here, you traveled there. I know you're, in different time zones, but I see you super active. I was looking, you're in like 100 different podcasts in the last 2 weeks. I mean, how do you
Yeah.
yeah, do you travel a lot? How do you manage the time difference? Like, what's going on?
Yeah. So generally speaking, for the US, it depends where we are. So American podcasts around this time. So that's my morning works really well. Your
Okay.
afternoon, and then on Europeans, my afternoon is then their morning. So
Okay.
I definitely miss that middle patch. But the other thing that's really valuable about the Aussie time zone
Mhm.
Everyone's asleep during my working hours. Americans go to bed, Europeans are still
Mm.
asleep. So
Mhm.
it's actually a very productive place to be because you can get all the work done. You can kind of watch the world happening around you whilst everyone else is sleeping, get all your work done. And then, I can write a report on Monday morning
Mhm.
and have it live for Americans Monday morning, which is a really, really cool setup.
So you talked about writing a couple times. What is that, like a newsletter? What exactly do you do?
Yes, so we've got a Substack over at Check on Chain. So
Okay.
basically, we do 2 reports a week, and what we try to do, our pitch line is where your Bitcoin personal trainer,
Oh.
and it's one of those things where you've got to go to the gym and you've got to repeat the same things, but over time that proof of work starts to build. So the way that I view on-chain data is just purely as information. It's information. It's about how in profit people are they taking profit, blah blah blah. And really, what I'm trying to do is stitch together a story to get my best understanding of what's going on. So we do 2 posts a week. One's written, which is 2,500, and then each post also has a video where it's me going over the same chart. So some people read, some people watch, some people
Mhm.
do both.
Yeah.
But it just helps people understand like what is my read on where I think we are. We
Mhm.
go over similar concepts, but also I'll introduce new ones, and it's just this like gym routine that you're building up all these different tool sets so that when you see a dip, the toolbox to go and pick up, and you can actually go through and do your own analysis, or we obviously, try to do it for people.
So you say we, is it you or is it just you or do you have a team or when you say the
Yeah, so
royal
I'm
we?
I'm the analyst. So the
Okay.
work, the actual analysis piece is me,
Okay.
and the we is actually my best mate. We've known each other since for, like our entire lives.
Okay.
So he's the other side on the distribution and manages all the back
Yeah.
end, and yeah, keeps the business and the wheels on.
So like people in your personal life who aren't like tech savvy, do they look at you funny when you say you're in Bitcoin? Like what's that intersection of your work and your personal life like there?
Less so recently. I think obviously price helps convince people to go, "Oh,
Yeah.
okay, maybe it does actually make sense."
Yeah.
But it depends. If I'm out in like a public setting, I will often, if I couldn't be bothered going through the Bitcoin explainer, I will still tell people that I'm an engineer because sometimes that's just
Yeah.
simpler and easier. But in the right
Yeah.
context, I'll float it. I would say there's probably like a 2 or 3 out of 10 hit rate where people actually want to dig in deeper. Oh, that's cool. That's
Yeah.
interesting. Tell me more about it. A lot of people with
Right.
their eyes just glaze over. I'm like, all right, that's fine. We'll move on. We'll talk about something else. So I still
Yeah.
use the engineer line fairly regularly, but sometimes I'll seed it out there, see what comes back. If there's interest, I'll go down it.
Yeah.
And I think a lot of Bitcoiners have said to me this cycle, and I have the same experience. I don't try and orange pill people anymore
Right.
because it's just like they will come to it when they're ready. But if they come to me with questions, I've got all day. I'll help people all day in understanding it, but
Mhm.
I'm not going to go and try and explain it anymore. I've done that phase, and people just need to come to it when they're ready.
Seems like the price does that, as you said. If you think back to 2021, like orange pilling people with all the celebrities, right? Remember the peak celebrity ad trying to get like,
Yep.
people onboarded, but it's really just the price now and buy-in fidelity and these other instruments to get access to it. I want to ask you about like MicroStrategy, right? And
Hmm.
what they're trying to do. I don't quite understand it, but it seems like every time I look, they're like more share offering or like how's there any value left if they keep doing what they're doing, right? To
It's a
accumulate
it's
more.
a fascinating business, and I've spent a lot of time trying to get my head around it. I've flip flopped many times, gone, "This makes no sense." Wait, hang on, he's a genius. I've spent a lot of time working this around, and I'm now working around this idea with all the other treasury companies. And I do believe strategy is in a unique position. So the way to think about it, he's got this treasury of 620 odd thousand Bitcoin. Now, if Bitcoin does what we think it's going to do, what he's basically doing is issuing in like a yield curve. He just issued a short duration bond with Stretch. He's got kind of medium duration bonds with Strife and Strike and Stride, junk bonds, investment grade. They're basically all different areas of a yield curve. But the thing that's really interesting about this, the liabilities for those, right? Let's for easy numbers say that the average interest rate he's got to pay is like 10% or 9%.
Mhm.
So he's paying on $100 face value. He issues, let's just say, $10 billion worth of these preferreds. He's paying 10% of that per year in dividends. But what happens if his treasury goes from it stays at 600,000 Bitcoin? What happens if Bitcoin quadruples in price, doubles in
Right.
price?
Mhm.
Suddenly, his fixed fiat denominated liabilities shrink relative to the pool of future dividends he's bought. So the
Okay.
way I've been thinking about it, simple terms, he is pulling
Mhm.
forward all of his future demand right
Yeah.
now by
Yeah.
selling fixed duration fiat instruments, building up literally centuries of future dividend payments. And because these things are perpetual, if you're a boomer, right, you can buy a 10% yielding asset. You know that he's going to have the asset to pay you until you're gone, until your kids are gone. So that's really the trade. He's just pulling all that demand in now. And the more that Bitcoin monetizes and the bigger his treasury, it's just in an unbelievable position to pay those dividends forever. So it is a fascinating play, and it really is the only one of its kind. There's a lot of copycats, but the delta between strategy and everything else is just absolutely enormous.
So, but what kind of risk does he have? I mean, is it like a price risk, or can they just come up with some new instruments and some different way to re-leverage it if it goes to
Yeah.
70K, 60K?
Yeah. And this is the thing, right? So he is actually remarkably unlevered. I haven't done the calcs recently, but the last time I looked, his balance sheet was like 16% debt to equity. So, an average household has double that in terms of debt to. If you got a mortgage, it's way more than that. So
Yeah,
most
30%. Yeah.
household balance sheets and companies are not even close. So he's actually a remarkably healthy and unlevered balance sheet.
Hmm.
Some people have said Bitcoin needs to go down, 80% and stay there for 5 years. It's got to go down to
Wow.
20, 30K and just stay there. That's
Wow.
kind of his risk vector. But
Wow.
if you look at how much he's raising in terms of capital, he's
Hmm.
raising something like $12 billion a year, 12 billion, and his total dividend outlays is like 1.6% of that. So, that
Wow.
gives you a bit of sense of scale of how much he has to stop raising money just to pay the dividends. And if Bitcoin goes where I think it's going to go, which he, by the way, by buying Bitcoin actually adds to that process,
Right.
it's got to get a lot worse before he's in trouble.
So this is fascinating. What do you think about like miners, right? I'm not a fundamental analyst, but I feel like they were a way to get exposure to crypto, like mainstream exposure to crypto. I feel like that thesis is gone a little bit right now. Do you
I think
agree
so.
with that? Yeah, okay.
Yeah, the challenge with miners is when you actually look at the business model of just mining in general,
Hmm.
literally everything is against you. You don't control your input prices, which is energy, and energy
Okay.
prices have tended to trend higher over time. You don't
Yeah.
control your output price, which is the Bitcoin price. Um, the difficulty adjustment is always making your life harder. More
Yeah.
miners are always coming online to
Right.
arbitrage whatever delta is left. It's
Yeah.
a brutal, ruthless. It's physical. It's electrical. Like this, you need engineers. You need
Mm-hmm.
racking. You need. I mean, this is the other thing a lot of people don't think about.
Hmm.
Just the sheer scale of plugging in that many miners, like
Yeah.
the power supplies you need it's a whole thing. So it's a
Yeah.
physical job. It's an electrical job. It's expensive. It's variable. My default position for miners
Hmm.
has been that they are going to go bankrupt all the time, forever. That's actually the expected outcome for miners is bankruptcy.
Yeah.
Now, a lot of people confuse that as saying, but isn't that going to make Bitcoin insecure? And the answer is no, because a miner may go bankrupt, but what they will have to do is sell all of their equipment, sell all of their miners, and they
Right.
just drop the price of that hardware and that operation until someone with a better balance sheet comes in and buys it. That will be profitable. If you sell that whole mining operation for $12, it's going to be profitable for anybody to run. Obviously, the price is higher than that. So at some point, you just get someone else come in. So the mining network is remarkably resilient and can be just fine. But individual miners here and there are going to fall off the map always.
So is that a danger like energy prices? Like I think so like if energy costs a certain amount, it's not profitable to mine and then they don't mine,
Totally.
or is that's a
Yeah, and there's
an
a bit of a
issue?
trade-off because there's the capex of buying the rigs in the first place and racking them up and getting them set up. But once
Yeah.
you've spent that capex, now there's a new hurdle. You may be unprofitable as an aggregate business, but the
Okay.
miner itself is actually profitable on an OPEX because you've already paid for it. It's not like it takes money to actually rip it out as well. So
Yeah.
once you've got it installed, you're going to
Mhm.
run it until the power price is no longer worth it. But there's a whole lot of other dynamics like load balancing and there's all sorts of other stuff they do by integrating with grid. So, I mean, it's a fascinating field. It's been actually one of the things that's been the most intellectually stimulating for me to understand how mining integrates with the real world and the power
Mhm.
economy. That's a fascinating element to itself.
Mhm.
But an individual miner, would I ever invest in one? No. Good luck with that.
How does that work? What is that? Stabilizing the grid, right? Like in Texas, they were doing that. So I don't.
Yes.
How does that mean? They take on like how does that work? They keep the system up and
Yeah. So
running.
so a miner will say, I'm going to buy 365 days worth of power at this price.
Okay.
But the energy operator goes, that's great because now I've got a long-term client.
Yeah.
Um, from engineering, when you design a power station, here's just a great example of this. If you design a power station, you need to have excess capacity for, like, a storm event or a winter event. People are turning on their air conditioning. So your upper bound of what you can produce is rarely actually hit. It's only in peak periods.
Mm-hmm.
But imagine if you had a miner who was saying, I'll buy that remaining 30% of your unused capacity, and in the peak event, I'll turn off my rigs so you can sell it to the public. So they have bought
Oh,
365
okay.
days. There's one day of the year where it's a freak event. They turn off and sell their power back to the grid, and they
Okay.
actually can make more money than they were mining the Bitcoin. But the public, they're effectively getting power at all times. They wouldn't even know this is happening. And the way
Interesting.
electrical systems work and grids, aside from launching rockets into space, I think our electrical grids are the most amazing engineering things people have come up with, and
Mm-hmm.
they have a heartbeat. And what these miners can do is they can help regulate that heartbeat. When there's too much power, or there's not enough demand, or there's too much demand, they
Mm-hmm.
can cycle up and down and be that regulating system to just allow the whole thing to remain at the correct level. It's fascinating.
That seems like a really easy PR thing that should be led to kind of give people more awareness.
Yes.
All we hear about is from Elizabeth Warren in the U.S. It's a crypto scam and criminals. But that I feel like that's a very positive thing to put forward.
Totally. And there's other things like, if you think about landfills,
Hmm.
landfills produce all methane. And miners can say, well, look, you can vent the methane, which is 85 times worse in terms of greenhouse effects and all
Right,
that
right,
stuff.
right.
Or you can pump it into a generator. We'll mine Bitcoin on the side, and yes, it's still carbon dioxide, but it's 90 times less bad for the environment. So it's actually better for us to just put a little generator there and just convert methane rather than flaring it into nothing. It's wasted power. Let's just use the power.
So any landfill is creating methane gas, and that can be funneled and then used.
Correct, and is
Okay.
being used, which, I believe that we're above 50% in terms of the mining industry.
Hmm.
The best estimates say it's more than 50% renewable energy, and that's an example of it.
Really? Wow.
Yeah, yeah, more than
I
50%,
didn't know
and
that.
there's no other industry that's even remotely close. So it's actually the
Wow.
greenest of all the industries.
How
And
about
if you think
that?
about that methane capture,
Hmm.
let's ask the question, would the world be, from an environmental standpoint, would it be worse off if there were no miners? And the answer is actually yes. So in a way, mining is actually carbon negative, where it's actually
Hmm.
more beneficial that it exists than if it didn't, which is, again, amazing and totally counter narrative.
Yeah, that's one of the narratives, like you said, that it's bad for the environment. It's very interesting. It's
Yep.
promising. That gives me hope.
Yep.
Wow, my
And
head's
that's the thing
spinning
when
though. Go
you
ahead.
ask about, are we evangelizing Bitcoin too much?
Right,
Imagine
right,
if there
right,
was a
right.
company that was doing all these things. It's making sound money. All right. It's
Yeah.
giving energy grids to people in foreign parts of the world. It's
Hmm.
stabilizing grids around the world. It's consuming methane. Like, imagine if there was a company doing all of this. Would you
Right.
want shares in it? Probably.
So, but one of the criticisms would be that you can't like just buy coffee with it. I know you can some places, right? Is that necessary, or is that kind of a separate discussion of whether we use
I
it
think
day
it's a
to day?
separate discussion. Yeah, and this is really the store of value versus medium of exchange.
Yeah,
And
yeah, yeah.
the
Okay.
challenge is I wouldn't buy my coffee with Apple stock either, nor my gold and nor my S&P
Right.
500. Why? Because the dollar is the shit coin that I want to get rid of.
Yeah, yeah,
So
yeah.
in many ways, like,
Right.
it's going to go through that store of value phase, and this is the journey. And I think a lot of people get caught on, why can't I buy my coffee with it? It's like,
Yeah.
think about, like, until everyone wants to hold it in the first place, which is a
Hmm.
store of value problem,
Right.
the monetization pathway is much longer than all of our lifetimes. So it's
Hmm.
going to take time for everyone to ubiquitously want to hold Bitcoin. And once everyone wants to hold Bitcoin, now I can
Hmm.
start paying for my coffee with it because everybody wants to accept it. But it's got to go through that trajectory first. And it just takes a long, long time for that to happen.
So maybe this leads into we talked about being more modernized and now BlackRock and all this stuff. Now the debate I wanted to ask you about is paper Bitcoin, right?
Oh, yes.
So help me understand that. What I understand is that some people don't understand. Oh, we're at 115K. Who is selling here? There must be paper Bitcoin. Can you walk us through that and help us understand what this is all about, the debate?
Yes, I think there's two ways to describe paper Bitcoin. The first one is FTX style, an exchange literally selling Bitcoin that they don't have.
Okay.
And a lot of people say, how can the ETFs, which, let's face it, most of them are custodied through
Yeah.
Coinbase must be pulling an FTX. And the challenge is, maybe, but where is the evidence? Because there's several folks out there, both data providers, but also individuals who actually go out there and track all the coins on chain and say, well, that looks like BlackRock. That looks like BlackRock. That looks
Mhm.
like Coinbase. And the
Right.
challenge is, and with that paper Bitcoin argument,
Yeah.
the risk isn't that Coinbase doesn't have the coins. The risk is that, to our best estimate, they've got like 3 million of them. They've actually got so many coins that the problem is that's a honeypot. So the risk isn't that they don't have them. The risk is that they have so many of them. That's the real
Right.
risk.
Mm-hmm.
So I think that argument is just people who have misaligned expectations. They think that the market should be higher. And,
Yes.
I ask like almost a rhetorical question. Okay, the market should be higher based on what? And what you actually find is that it's just your opinion, man. People just have this view that the market should be higher, but they don't actually have a basis for it. Now, the other question on paper Bitcoin is more real, and that is the derivative side of the equation, futures and options.
Mm-hmm.
And the truth is, I actually wrote a piece called Paper Bitcoin where I made a case. If you don't have a deep and liquid options and derivatives market so that people can hedge risk, Mr. Big Capital Allocator who wants to put $5 billion to work, if he can't hedge $5 billion worth of risk, he can't open the $5 billion position in the first place. So, a great piece of evidence for this, since the options went live on IBIT in November last year, IBIT is now just exploding in dominance. It's 56% of all the ETF AUM right now. And it was like 46% back then. So it's just expanding, and none of the other ETFs are seeing growth, only IBIT. And the price is now substantially higher. Big money can allocate to Bitcoin now because it can hedge big risk. And, it's just one of the ways that markets work. They need to be able to do volatility capture strategies. They need to be able to do put calls. They need to be able to do all this stuff in order to allocate in the first place. And when they can, now they can actually buy the spot.
So they have a big position, but they can hedge the risk by having some futures trade that kind of offsets it. And then they can kind of say, okay, I'm covered a little bit, right?
Correct. And you also get demand from just like, hedge funds who just want to put on some kind of arbitrage, right? They want to buy spot in the ETF, short futures. They may want to do volatility capture where they just sell covered calls and then they sell covered puts and they keep the price in a range. People say, but that's manipulation. I just say that's markets. Every asset ever of any scale has these derivative systems. If you don't have deep and liquid options and futures, you're a penny stock that no one trades anyway. So you know what I mean? It's just part of the process of growing up.
That's the thing. This is all fascinating. A lot of people think it should be higher, right? And based on what? Well, based on Larry Fink said such and such, or I don't know, whoever said whatever, it should be $1 million, in 10 years. And so we tend to get caught in the moment and think, wow, there are moments, I'm sure you've seen, James, where it does feel like the price is unstoppable, or it does feel like it's just going to keep rising. But I think the reality checks are helpful. Quick 10K drops, quick consolidations. It shows that it's a mature market. And do you think maybe this is more of a price TA, technical analysis question, but maybe we're not going to get these 80%, peak to trough type corrections? Maybe that volatility is a little bit truncated. Maybe we'll have tighter ranges and more kind of grinding higher type action.
Yes, let me give my thoughts, because I'd actually love to hear your thoughts on how price structure has changed, because it has changed since 2023. We've got this more stair-stepping up sideways pattern, which is super healthy. And if I think about from like the drawdown perspective, we've got 32% corrections and they lasted like 4 hours and then the market rallied. But like that's as bad as it's been. So
nothing.
Sure, we may not have had a ripping 100x upside, but let's remember that we're 100 times bigger than we were in 2017. We're 20 times bigger than we were last cycle. It's a much bigger animal. And yet the drawdown profile is the shallowest bull market we've ever seen. We're just not getting any downside, which is incredible, right? And the sell side action that we've seen, we can see it in the on-chain side. You can see it in all sorts of ways. We're talking billions of dollars a day, billions of dollars a day. And the market is not pulling back. So to me, that's actually the most bullish thing, because we're seeing this rotation of holders. We're seeing people step in at 100K, 90K, 95K and saying, yes, I'll buy Bitcoin at billions of dollars a day in scale, and the market's going higher. Like, to me, that's remarkable and incredible. But I'd love to hear your thoughts on like, how has price structure, just price structure changed? I think it changed when FTX blew up. Everything from there on has this different resonance to it. I'd love to get your thoughts on that phase.
So for me, if you look at the evolution, what's changed for me? Like if you look at, was it 2022? We dropped below the 2017 all-time high. So we'd never seen Bitcoin drop below a prior all-time high. And then Bitcoin also spent a lot of time below its 200-week moving average, the most time in history, which is kind of just evidence of a slow, I mean, not like topping up, but a slowing down, which is, like you said, is mature. You can't just keep, kind of rocket shipping up. I've seen volatility kind of go lower, which isn't great because I love volatility. I mean, it's kind of
Sure.
what I gets me out of bed in the morning. But it has been resilient. There have been very shallow retracements, as you've talked about. And I think a lot of people are waiting for dominance to cool off, right? People are waiting for it to be altcoin season, waiting for Bitcoin to do what they're expecting it to do. But I don't think we can expect that. I mean, Bitcoin's only
Agree.
been around, trading whatever 15 years, whatever the number is. And we can't, it's only been 2 or 3 cycles, whatever number. It's not a guarantee the next will be like that. So it's adapting, it's becoming less volatile, but it's more resilient. And
Yes.
I dig it, man. It looks good to me. There's no real warning signs. I love hearing about the stuff outside the price chart from you and some of these other folks. And I find that all fascinating.
So my
Yeah.
interpretation of the cycles has actually evolved in this period too.
Hmm.
And you can actually chart this out if you just look at the Mayer multiple, which is just literally the ratio of price and the 200-day moving average.
Okay.
If you just do
Yeah.
that ratio, you'll see that the 2017 top, the way I divide Bitcoin cycles, has got nothing to do with the halving. The
Okay.
2017 top was that was the end of the first cycle. Very adoption driven, all retail. We had no trading view, no derivatives, no stable coins, just all organic retail.
Yeah.
Then there was this middle period between the 2017 top and FTX blowing up in 22. And that
Mm,
period, if you look at that oscillator, and you can see this in on-chain data and everything, it's these like high amplitude, straight down, straight up, straight down, straight up. It's these really big high amplitude swings.
mm,
Since FTX blew up,
yeah.
it looks like 2017, but it just kind of it's got this slightly different resonance. It moves a lot more around the mean. Whereas if you go back to 2017, we would
Okay.
find support on the 200-day. Now
Yeah.
we oscillate around it. So it's a very similar spot driven pattern to 2016, 17, but it doesn't have the high octane, straight up, straight down chaos that was in that middle period. And you see this across many, many metrics, which gives me that idea that there's something that changed in 2017 and there's something that
Hmm.
changed when FTX blew up.
Wow, it's fascinating. I only got into crypto in 2017, and I've just, I remember when I got in, I thought this is pretty cool because I did a lot of penny stock trading and equities before that, and I really loved the volatility. And I thought, man, I just hope they keep Bitcoin going for a while before Wall Street kills it. And I feel like we survived. I feel like we
Yes, I think
survived,
so.
man.
Yep.
Um,
Yeah, and there was every reason for it to die, and yet
yeah,
I mean, now they're at the phase where they tried throughout
yeah,
the
a
last
little bit.
administration tried, but now they're just welcoming it in. And like once it gets
Yeah,
that ingrained, once you've got Wall Street
yes,
involved, like the
yes.
interest is just so big.
And when these things are not securities, right? That's a big deal, or many of them, and that's a big thing that people have been waiting for.
Yes.
Let's see. I see you've done like a ton of podcasts recently. What was the favorite one you've done, in the last like
It
month or
depends. They
so?
all come from different angles, right? Some people want
Yeah.
to hear more about the price. Some people want to hear more
Yeah.
about the kind of the fundamentals. I
Okay.
actually like the ones where I get into like the weeds of like why on-chain data is interesting from that site we started the start of this episode. More of that like psychological element. But yeah, it very much depends, right? And in
Yeah.
many ways, I kind of like more of the philosophical stuff. We've talked about mining and everything.
Sure.
These kind of wide, varying discussions are always good fun too.
Yeah, man. I love. I'm really glad you came on. There's so many people in this ecosystem that do things that I just don't understand, and that's cool.
Mm.
To me. And I micro specialize on the Bitcoin price and trading. What's on the chart. And I love that there's people. I listen to these spaces. I listen to you, and I'm like, man, there's some really interesting stuff, technical stuff that's going on. It's not just fluff. It's not just buy this dog with a hat or just no disrespect to those people, but I love this space, man. So
It's been
before
a
we wrap,
bull case of mine for a long time that you
yeah,
see the types of people and the backgrounds who
uh huh,
come in and they all from whatever background they come from, they resonate and they go, something
yeah,
about this Bitcoin thing makes sense. This is a
something's
solution to
cool,
problems. And you get
yeah,
all these smart people congregating in one place. You're like, what am I going to do? Bet against all of them? Like that seems like
yeah.
a fool's mission.
Oh man. So James, it's been great, man. We're getting towards an hour, 45 minutes. Do you want to like talk about anything, projects you've got going on, anything you want my viewers to know about? I'll link it all, of course. But
Yeah, honestly, I would actually love to ask you a question on.
okay,
So you spend a lot of time I mean, you've been in markets and trading, and like trading to me,
yeah,
and we were talking just before we hit record.
Yeah.
For me, one of the most important things that I learned from my mentor about markets is that they're just information. It's like the
Yeah.
tide. It's just going in whatever direction it's going to go in. You can't do anything to control it. All you can do, and the only thing you have control over, is your decisions. So the way that I do a lot of my reports, I never want my subscribers to feel like a deer in the headlights. If we rip to 150K, I want them
Yeah.
to have already for months in advance have a plan for that. And if
Good.
we go to 75, I want them to have a plan.
Good.
Even if you don't need that plan,
Yeah.
going through the mental exercise means you're not shocked and you're going to be able to make a decision. What are some things like, a couple of things from your experience in markets that just like help people understand that it's a game of yourself and you can't change markets, but like things that just help you survive in what is otherwise a chaotic and brutal world?
Wow, this is great. So there's a couple things. I try to tell people to have a simpler system and to, first of all, every trading idea should come from them, from their watch list, right? Be a
Yes.
rock, not a blade of the grass. So, someone else talks about something, fine, whatever. But every time you're risking your hard-earned money, it should come from your own thesis. It has to be a thesis you can define. Here's why I'm in. It's a breakout, and you know where your idea is wrong, so you can cut loose. And I'm just telling people that you have to try to gain experience and then make mistakes and learn from those mistakes. So how can you do that without blowing up your account? Smaller positions, manage your risk, cut your losses, teach yourself emotional mindfulness, use your journal. Kind of, there's a lot of trading psychology. So I kind of come with a psychology background, but a lot of it is teaching self-reliance and not relying on anyone else. A lot of great people in this space, a lot of great learning stuff, but it has to be you, your own system. Find one that works for you. Maybe you love Elliott waves. Maybe you love on chain. Maybe you're a candlestick trader. Whatever it is, find your system and then have your ideas come from you, from the four corners of the chart or whatever it is, but not from other people, because you have to hold yourself accountable. If you try to learn something and you fail and you have someone else you can blame, you're not going to get anywhere, right? You have to take accountability to grow and learn. So make it self-driven, I think, is kind of the foundation of my strategy.
And when something goes wrong, if you've made a decision based on someone else's opinion, you don't know when to cut loose
You
because
don't know.
the market's going against you and you're trying to find, is he tweeting about that thing that he said? Like, he doesn't care. He doesn't know that you've got a position on. You have to think about it from your own perspective because you
Yeah.
are the only one who can make that decision. And it's a similar
Yeah.
energy. Once you realize that the only thing you can control are your decisions, just
Hmm.
focus on that. Everything else is just information, and it actually frees you a lot because you're not trying to blow on the chart to make it go higher so you get it back into profit. You're just saying, well, if it goes here, I'm going to make that decision dispassionately, and I'm going to make my plan now before the chaos hits. That's something I say to a lot of people because the truth is there are people out there who do want to take profits. There's going to be a point in this cycle where they're going to say, I want to actually sell at that point.
Yeah.
Write that plan now and have it written down so that when you get there, you're not moving the target, right? The market's ripping 150, 160, 180. And you'll say, oh, but it's going to get to 220. And then the moment you make that decision will be the top and you'll be down at 100 before you finally realize that you've made a mistake. Write the plan down now when you're cool, calm, and collected and stick to it. That you are making it when you're cool and calm, not when the market is going in your favor or going against you and you're trying to adjust your thesis in the heat of the moment. It doesn't work.
And allow yourself the idea that you're not going to play it perfectly. I mean, you're not going to nail it. I have a guy in my DM. He was like, Chads, I'm in a real tough spot. I got to buy a house and they're going to make me sell part of my stack. And
whoops, sorry, mate. I think
you're
I
good.
cut out there on the audio. Say again.
Audio's good. Video's out, but we still have your audio. But it's okay. So I basically had a guy who said, look, I need to sell, a certain amount. I need to know if Bitcoin's topped off. I'm like, bro, you're never going to nail it exactly, right? You can't know the top until a little bit later. If you have to sell some, just sell it.
I've lost
and
you
know
on the
that
audio, mate. I don't know if you can hear me.
Oh, it's good. I can hear you. I can hear you.
You can?
So, yeah. So
Yeah.
look,
All right. I've been cut off. I can't hear you,
no, dude,
unfortunately.
this was awesome. This was awesome. Thank you so much. And
Thank you,
we'll
mate.
see you soon. Okay.
Real pleasure.
All right,
Thanks for having
brother.
me on.
Thank you. All right. Take care, man. All right, folks, there it was. What a great interview. What a really smart guy. I know I learned a lot. Hopefully you did as well. This is part of the long form interview series where I bring on people smarter than me so we can learn about Bitcoin. We can learn about the ecosystem. This was James Checkmatey. He's a fundamental analyst, on-chain analyst. He's does a lot of great work. You can check out all his links here and his newsletter, of course. Really hope you folks enjoyed the interview. Let me know what you think. I am Big Cheds. You can find me on YouTube at Cheds Trading. And while you're here, check out the brand new Trading Encyclopedia playlist, 3-minute videos designed to help teach you professional technical analysis. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. So once again, warm thank you to our guest. I'm going to get this video uploaded for you folks. And we're going to finish up with a little bit of dancing as always, Church of 8 Wheels. So anyway, folks, thank you so much for being here. Let's get it going. Thank you, everybody. Big Chad out.